Hi, November the 18th. We're getting closer to the end of the year, closer to Thanksgiving. And obviously, this is NVIDIA week, the new macro. Anything could happen. In fact, NVIDIA, the sort of rumor that was around a couple of months ago that they've got issues with the Blackwell next generation chip are doing the rounds again. So it's off 2 or 3% pre-market, just holding futures back really today. Nasdaq did open fairly strongly in the Asian session, but it's drifted back. The big issue is, and we'll have a look at it, where exactly are we? Are we just doing a consolidation of the Trump trade, a breakout after the election, and then we're going into the November and December pushes that normally take us to highs? Or is the whole thing over and we're about to roll away? I think there's a lot underneath going on, despite the fact certain sectors like pharma were getting beaten up on Trump appointees, Kennedy Jr., etc. The financials were very strong, which normally tells you there's very little stress going on underneath and people are possibly rotating into that. Obviously, a lot of gold strength, dollar strength has been affecting gold and various other things. There's still a bit of a sulk going on in the US bond market. I'll have a quick look at what's happening with the yields there. They could easily be just about to fall again like they seasonally do. And we'll just generally have a quick touch on where things could potentially be. Obviously, the NVIDIA results are massive on Wednesday for the whole Mag 7 trade, the whole tech trade. We don't really want the golden star, the king, to be toppled. Most evidence so far from all the people who feed them and they're in similar spaces have been outperformance. So it would be a bit of a shock. And delivery wise, they've got demand for everything that they can possibly make. SMCI having trouble and orders disappearing would probably be swallowed up in the ether, as it were. But we don't really want to see too many delays for Blackwell, the next generation chips, because that was set up to be starting in this quarter and beyond. So we don't really want to see much affect the outlook. The results are almost a given that they're going to be a beat, an outperformance. It's what we look like going into the next 2 quarters that we should focus on. Sorry, just a Discord beep putting me off there. So hopefully you've all survived. It's very tricky at the moment. Data-wise, we've had a lot going on. We've had a lot of talking heads going on and results being absolutely crazy. You'll see that from the length of my previews for the last 3 weeks. They've been huge as we try to get a nuance on the micro side of things, just a few one-liners on most of the daily important results, just to give you a bottom-up view is what we've been trying to do, as well as top-down. As we said before, if you play indices, particularly, and sometimes for currencies, it's important to know what's actually going on out there, M&A, trends, anything to stop inflows coming into a country for bonds and interest rate plays, etc. And as we know, we want to have a good feel for what the dollar's doing, the DXY. And as usual, we'll kick off with that on the charts. Just quickly running through the first bit of the preview: XLF, KBW, the Banks Index, another ETF, XETR, financials, all quite positive over the 5 days of last week, despite the market pulling back. There's a broad pullback. Nasdaq and Russell 2000, so the mid-cap shares and small caps, all coming off at the same time. Interesting, the ratio there is going nowhere. Nasdaq divided by the Russell. I have to try and work out literally what is occurring there, but to me that looks like there's probably a new high on that ratio before it may continue some downside. So that is pointing to a larger cap breakout over the mid cap in the near term potentially, but that's not to say that there's not a, I mean, it's all very confusing at the moment. I think we're range bound within this sideways movement, but it leans towards eventually sorting itself out with a top there, which eventually breaks down. And that's probably the Trump trade next year, just really benefiting certain segments. We'd said equal weight last week. We're due some consolidation. Looks like we've got that. We had a breakout post-election. And now, look, we've given up half of that on the broad-based rally. We haven't tested the 50-day moving average. Is that to come? Do we need to go that far, or is this literally nesting ready for breakout? And as usual, we can see there that what looks like a third wave of 5 had higher peaks. We've got divergence as it's hit the ultimate top post-election. So it's kind of given us a clue that we're due for some pullback. It's just whether we lose momentum completely or whether this is just a turning point. I did have some data on options. I've deleted it without saving it. I'm going to bring you that back during the week on my chat. But there does seem to be a lot of SPX 500 puts interest around 58.50 and 58.20. So keep an eye on that. It's not a million miles away from where we currently sit, sort of 58.70. So the main issue I've been trying to get across is that the professionals were super long stock, but downside protection with VIX and puts. And there seems to be some evidence that the hedge funds are starting to close some of their positions down going into Thanksgiving, which is a normal thing. And obviously they had the big breakout rally post-election. VIX hit a low of 13.59. We'll look at that in a minute. Last week, there's a lot of large trades unwound. And then we had the weakness in the market, which has sort of brought retail punters flying in. And now there's been a bit of a double take, and they're starting to buy the downside protection. Well, that is normally when the market makers are in control. I said last week we were looking for some evidence like that the retail was going to throw the towel in and the market makers would pull the market down and try and get filled in. And that's what we describe as strong hands being back in control of the market. So it's really suggesting we're setting up for that breakout. We just need to be careful that, let's say, things like NVIDIA don't break down the underlying structure. Earnings season is more or less over. 90% had reported by last week. And then there's some good discussion on my chat over the weekend about commitment of trades data backing up this kind of closing down. The speculative hedges are now net short of the dollar, even though we're still putting in the top. May have already put in that top, and we'll look at the options for that. That's kind of symptomatic of what goes on at this time of year. Lots of things don't necessarily give you the next direction. It's just the unwinding of what have been positions held for some time. And I wouldn't be surprised to see people just back off until we actually know a lot more about Trump's policies at the start of the year before the big bets are put on. So that again leans towards the last 15 years seasonality in the euro and dollar, as I keep saying, could easily take over now and just see us drift back while everyone's still talking about the inflationary effects of Trump. Follow the market, I think, on the dollar. Bitcoin, I'd love to see fill in some of these gaps we've got. The fundamentals seem to be there. 100,000 looks nailed on before we have any kind of proper pullback. But just as part of this move up, we look like we've got potentially one, if not two, more small pullbacks before the breakout's finished. Let's hope we get something decent so we can jump on board. Oil last week, EIA and OPEC Plus had both sort of muted outlooks for next year. As I said, they could easily have some geopolitics. Obviously, we've got North Korea going on at the moment, and long-range missiles for Ukraine from the US, permissioning sought and given for some attacks into Russia. Potentially, we might start to see some safe haven flows, but at the moment, that's not happened. The dollar's drifting. Gold's about the only one that's shown anything because oil is flat on the day. And if anything, ranges of 72, 78 for Brent next year isn't much of a move in my eyes, given the setup. And it wouldn't be a surprise without big Chinese stimulus to see the whole thing drift off into 60s. Wouldn't take a lot, low 60s, if not below. So just be careful. Bias is still to downside, but I wouldn't rule out, a double flat correction into the mid to high 70s for Brent before that eventually gives up. So I haven't got your chat. Let me just pop out the chat so I can see what people are saying. Pop it on. Are you showing my chart? Can you see the PowerPoint? Yeah, I've not gone to charts yet. I'm just doing a quick overview, and then we'll look at those charts. Gold and silver to continue bounces, if not full pivots. We've started to have a bounce today. We'll look at that. Very little data. There is a 10-year TIPS auction. The TIPS are the inflation protection bonds, so there'll be a lot of chatter around where that actually settles this week. So look out for that. Just a little bit of chatter. Remember, as we're going into this potential pause from the Fed, whether it's December or January, the Fed has the dual mandate. And when it comes to looking at the employment side of things, the household reports only added a couple 100,000 this year, whereas the establishment, the non-farm payroll one, has added 2.1 million, including having to have a 1 million guide down, and something like 90% of all the updates to non-farm payrolls have all had revisions down in the main over the course of the last 2 years, really. So what do you believe? So they've always got that in their back pocket, that they can start claiming that there's underlying weakness in some part of the employment side of things. So this was a chart at the start of the week, the 2-year, 10-year spread, which actually in the election week had totally seen some flattening, 7.5 basis points. That has since sort of calmed down a little bit, given up a little bit of that. We're flipping and flopping on the yield on the US 10-year in the up channel, which we'll look at in a few minutes. In fact, I've moved it around. There it is. So the daily yield chart, that had been the breakout thing that had started spooking the market a little bit, and going into the build up to the election, sort of started to fall with all the chatter about Harris, and then we had the spike up on Trump to the top of the channel, and we've still not regained that channel. So I was talking last week, if we don't stay in this and it keeps failing, that's the kiss goodbye, and we could get the falling yields, which generally drives breakouts at the end of the year. We saw it massively last year after we came off the 5% top in October. So for now, 4.5%, 5% is what you need to keep an eye on for bond-related panic to other asset classes. And here we've been talking about it for weeks, the volatility going into the auction, the bond downside protection in the bond market, which even there started to unwind quite massively. So I had a big gap down, 40 points on that move index, the bond volatility. Last Monday, Bitcoin was at 80,000. We were all getting excited about that. And then subsequently we went through 90. Bitcoin 100 surely is in play. Just looking at this whole nesting approach that we've had throughout 24, we had that top. A lot of issues within here from crypto miners, etc. Let's get rid of that one. Crypto miners having to sell some of their hodl accounts because of the halving effect and the how expensive it was, given the hash rate had gone to record highs. But that's seemingly calmed down. Again, weak hands passed over to stronger hands, and we've got the election result that any crypto followers were looking for. So, more nesting here, 5-wave leading diagonal there, a pullback, and we're in the third wave, which is very difficult to pin down, but seemingly looks like we may have a pause coming. Can we get that back into the mid-80s? That would be brilliant, and then we can drive on again. But again, this is third waves of third waves of third waves. There should be consistent upside in the near term for Bitcoin. We're just looking to hopefully get something to catch on to on a pullback. Politics, lots of issues. Looks like they've won all three houses now, both houses, and they've got the presidency. All those results came in over the week and guaranteed it. And he started to put his people in place, which has had various sector issues. Europe is obviously in a bad place at the moment. The issue is whether there'll be tit for tat comebacks. There's already chatter going on between China and Europe of having closer ties to try and circumvent this. So net, Trump is going to make things look more positive for domestic situations, try and take out the M sector of the aggregate demand, and we'll see where it ends up. But often, as some people are saying, that ends up going nowhere. ISM will look quite robust, but doesn't really grow too much. It'll look like a successful policy domestically. So there might not be as much issue for total global trade as what people are trying to make out. And this is why we'll have a lot of sector rotation, and there may be new winners going forward rather than what we've seen for the last 4 years. Excuse me, got a bit of a cold today. One thing that will happen most likely is M&A. Remember, part of this big trade, the finance breakout, was the deregulation side of things, and that should come through. Credit spreads are two ways of looking at it. The stresses on the country at large and stresses on the economy, and a strong economy at the moment means there'll be fewer defaults, so the credit spreads shouldn't really cause too much harm for valuation. So it will end up being a nice sort of becalmed outlook for people to push on with M&A, knowing that they're not going to get too much pushback. Will be good for telecom and media, part of Trump's loves. So some people have used an example, Comcast versus Charter, may actually go through now, whereas Biden was guaranteed not to let that happen. So M&A will be a big winner. Anything with fixed costs that can be broken up. European targets, real estate, again, something close to Trump's heart. And water assets in the UK massively set to be picked off. So that will possibly kickstart some indices bounces early next year as those policies come through. And Elon, well, he's just playing so many levers, isn't he, at the same time, hoping for one of them to come off. SpaceX upped its sort of funding level valuations last week from its previous 210 billion to 250 to try and raise money. So I don't think he's too bothered about the short-term Tesla effect of taking away the little boost, the 7,500, whatever it is, EV tariff thing. That basically makes it tougher for his competition in that space, which he's not too bothered about because Tesla wasn't really winning that race short-term. Jamie Dimon's turned it down. The Treasury Secretary is the one big one we're still to hear. Lutnick is supposed to be the favourite overnight. Musk really supported him, but don't know. That might be interesting. That might be set up for Trump to go against Musk, just to look like it's not all a one-way positive for Elon. But we'll just have to see. Pharma and health-related sectors really got smashed last week on the perception, the heuristic that Kennedy Jr. is going to be a disaster. That'll be to see. It might just be cozy relationships here that are getting hurt rather than there be any scientific necessarily bad fallout, negative fallout. We'll have to see how that develops. German elections, Scholz has ended up with February now. He'd wanted March, and he's been cozying up to Putin, which has upset a few people. Not surprisingly, particularly as he's got very little political clout at the moment, but it just shows you how desperate Europe are to be heard by anyone, because the US certainly aren't listening to them, which is why the chatter, sorry, got sore eyes, is all about parity on the euro. But to me, it feels like we're very much towards an extreme on this whole dollar-euro fundamental setup. So I wouldn't be surprised to see little pingbacks. However it goes, I mean, look how split Germany is. It's all over the place. Auto sector is the big unions in Germany. They will have to be appeased. And that sector has been under a massive amount of pressure with the whole EV situation. So anyone that comes up with a solution that eases the burden on the autos is probably going to be the winning combination. Now, we talked about the VIX, the volatility, et cetera, We're looking for that to unwind. That brings back in the quant funds that want to see it below 16. And look, this showed you some kind of capitulation or unwind. It was basically a vol play that was in place, equity calls and long equities versus long VIX, long puts. Gives you a V-shaped P&L profile, it's a volatility profile. How does that unwind as things move? Then people get to sell more of the stock if they're long gamma as it goes up, so they're winning and winning, but they'll be unwinding the other side of that as they're selling. So massive amount of protection would have come off, which is why you start to get these low prints. And then as we went into the end of the week and the market started selling off, then there's some protection has come in. That is mainly manifested itself in the retail side of things. So we've now got retail long into top and buying puts as the market comes off into what's already an established bottom. I wouldn't be surprised if the market is now going to walk them back up given the opportunity. So we'll just have to see how the NVIDIA thing plays out during the week. But this is where the weak hands normally get really frustrated. They'll have had the right position on, we've got spooked out, and then the market will look to really drive this away from them, hoping that they come rushing back in to buy at the top. This was a good chart that was floating around last week on Reuters, fading fiat. So the skew factor of puts, implied volatility of puts over calls, that has dropped back from this. That was the peak in the unwind of the Japan carry trade, but look, going into the election, it was still at elevated levels. We've had quite a pullback, but still really the yearly trend is at least here, if not below. So it's still at fairly elevated levels, skewed towards downside. We want to see that unwind a bit more, really. So to me, we are still in this grinding up channel. More and more likely is that this is a connector at the very least that then bounces before it goes a bit lower. If anything, we've got more of an overlapping nature here, so that this is 1, 2, 3, 4, 5. Prior to that, we wanted to see the whole thing driving up in a wave 3. So this may end up being a much wider initial surge that went into the election that then consolidates, and then we go up with a smaller wave 3 and ultimately smaller wave 5 to finish. What we need to look at is having stop losses at the lows down here for the if you're going to stay naked long. Otherwise, a protection until we see the whites of your eyes. Obviously, we tried to move up this morning, but that's rolled over with NVIDIA. So we're still in a bit of a confused state. Normally, we would see a rally into NVIDIA, and then it has been cooled down on the last few quarterly updates before everyone calms down, looks at the overall growth rates and pushes it on. There just apparently seems to be some cycles floating around which talk about, I think one's a 49-week one, and then there's some kind of 2-year cycle overlapping into Thanksgiving, which is potentially putting some sell-off angst overlying the market. But the S&P generally, with all that locked-in vol trade, even though it's unwound a bit, a lot of it is still in place, and a lot of the under-overs are supposedly at 5,800 to 5,850. So we'll see exactly what happens if this tries to put in what will be, again, for the S&P, a double extension to go much lower. I think we're still looking to play and toying with that, what is now downward sloping trend on the stocks above 50-day moving average. We'll have to take that out, I think, for momentum-wise to push on more to get in this final high. So this is something to look out for this week. If we put in a rally which starts to fail again at that downtrend level, then we're going to put in a double extension and challenge the moving averages. So that might be something just to keep an eye on how we're trading there, momentum stock-wise in the S&P. The Dow, again, that's bounced off a 38 fib, really, from its move up from election day. And normally 38s associate themselves with a wave 4, so we might have to look at this slightly differently. So that may well be a third wave hidden within that. We might have had a very short 1, 2, a move up. As a 3, we've done an equal legs and 38 fib bounce. That's a strong confluence to be at least having another move up. Obviously, if it has another sell-off and goes below 61.8, then we'll probably stick with this being a leading diagonal and building for further breakout strength into the end of the year. So at the moment, I still favour overall indices by the end of the year moving up. It's just trying to time the short-term moves. We just need to keep an eye on current lows, current Friday lows, how we react with that, how much deeper that goes, because it looks like we should really be at an ending pattern there, or we're then looking at a 61.8 or 100% extra downside. We just do need to be careful short term. I want to buy solid dips, but at the moment this is dangerously looking like a connector short term. But we were waiting for pullback. I've started to make a swing position, as some other people have, in and around Fridays. I started on Thursday's lows around here. Thought we got away with it. Then we've come off again. Had another small tranche here on Friday, and I'll have another go if we come down to this one spot 618 for the move, because that could still be valid for the whole 3-wave extension for this current wave without having to think about it being a double. So this block here between 1 and 1 spot 168 is all valid, finishing off this pullback. So I'm not giving up really until we take out 43,000 on the Dow at the moment. FTSE again, and all these indices have been weak today, haven't they? They've all rolled a little bit. Germany's flat. FTSE's holding on. Japan's flat. So again, it's kind of valid that a 3-wave final pullback there. That could be a WXY, but I'd like to see it as a 5-wave really, of which that's 1, 2, 3. Connector, another small low, ideally on FTSE and Germany, and Japan really would be ideal. So we started Thursday, Friday. Have we quite finished yet? I think we're very close to getting into the seasonal breakout. Let's just try, as I said on Friday, just trying not to get too many fingers cut off, not getting ironed out, as it were, with the Mike Tyson reference. He started to show his age, didn't he? I think there's a lot of skullduggery going on there. There were a lot of signalling going on from his opponent to don't hit me like that again. All a bit of a farce, really. But in terms of markets, pretty much looks like that is all part of a double for the wave 4. Anyway, what we thought was a bottom pre-election has ended up, there's been so much noise from Germany and Japan that we are just putting in, just a little bit of extra angst. So you got a choice really here. We've started to pull back again, haven't we, in the DAX? Is that your stop loss, or are you going to allow for scaling into this whole pullback? It's difficult to time exactly, but I do think this is the final leg of the pullback for the DAX short term. It's then whether it has enough strength to put in an ultimate all-time high before the end of the year, or whether that comes into Q1, etc., before we finally top out. I think, of course, the issue with Trump trade in Q1 next year, and if we get stimulus from China, etc., and more closely seen cooperation between EU and China, then you might start seeing outflows into emerging markets and developed market Europe, which have obviously been seeing nothing but outflows really of late. The UK, that's been still seeing outflows, etc., etc. So there's a lot of potential for dollar weakness going into other parts of the world, investment flow wise. Again, euro, Germany itself, tariffs, trade, headwinds to the euro. China did see a bounce in retail sales off a very low base on Friday. I said a point, does that mean that that is an end to stimulus? That, to me, that's more likely that they do consumer stimulus. It's a very strange paradox in that historically, and this happened in Japan in the 90s, I think it was, they gave them free money and everyone just banked it and didn't spend it because they decided things are so bad, if they're giving us free money, then we need to hoard it. Whereas what they really want to do is to feed the beast that starts the upward inflationary price spirals, just gets activity going. So once, if you've actually got the consumer doing something, they might just give them a helping hand. So it sounds paradoxical, but it's more likely to happen. Right, the dollar, which we're just beginning to talk about. I'll go into that chart in Trading View in a minute, but I just want to look at the short-term bigger picture, and then we'll look at the overall bigger picture, what the A means, etc. But since the high for the dollar into the bottom in October 22 of the stock market, we're in a retracing pattern. I'm just trying to work out where that finishes. So because it's a combination of overlapping ABCs, generally call these WXYs in Elliott, just because it's become a complicated sideways structure. What we're really looking for is a WXY flat in terms of the reds, of which we put the W in, and then we're currently in the connector structure, which has had a rally up, and then originally that could well have just been the X in itself, and that has been the situation until it's been a high probability situation that we've been doing nesting 1-2s all the way, apart from we're right now on the cusp of taking out that resistance zone from September, October last year, 2023. So if that goes and that takes out, the chance of that being a connector makes it part of an ABC, in which case equal legs takes us up into the 108s, but that would be an X, and we'd be into the final three-wave move of the red Y down to new lows. And that for equal legs from W of 114 down to 99, that's 15 points. From 108, then we're looking at 95 and below. That's been the whole setup. Now, either way, I think the favorite positions at the minute are the fact that we are doing some form or other of this X pattern before it sells off. Now, some are arguing that this actual July low 23, the W was the low for the dollar, and that because we've not taken that out, again, that was a really crucial defense in September, October, of not actually putting in a lower low, then this could be nesting 1-2s and we're in a breakout third wave. But for me, that currently isn't the setup. What I do possibly lean towards it being, if that zone doesn't go, then just like in 23, we had a very complicated sideways triangle, A, B, C, D, E, contracting triangle. We could potentially be doing that again. The A hasn't been taken out. We've got an inside B, then we'd have an inside C, then we'd look to have a sell-off, a bounce, and then another. So we'd have an A, B. We'll have I've labeled it up another one. We'd have A, B, C, D. No, I'm on the wrong. Let me go to the thing because this is written up differently. I redrew the labeling for you this morning, but I've now just closed it by mistake. There we go. Right, actually, no, we are there. I'm confused by there is because I've left that B over the OR. So if that isn't the B wave and we're not finishing off the C wave to make the X, then this would be an A, B, C, D, E before we put in the B that has a rally up to finish off the X wave over here. So look, you'd have A, B, C, D, E. So you have three low points, of which eventually when you get the E, you get an explosive overthrow of the whole pattern normally, which would put in that high. Now that to me does sit with what's potentially going to happen with the Trump trades for next year. So at the moment, I think it's a little bit overdone, and we've got seasonality against the dollar, which is why I'm leaning towards having a pullback, whatever it is, whether it's actually into the Y wave or whether it's some of these subwaves, then we start to see some policy, a little bit of strength. Now, remember, they've already chatted about giving 2 years to companies to avoid tariffs by moving into the US, and NAFTA, which is what Mexico is exposed to, the North American Free Trade Agreement, comes up for a negotiation in 26. So that is why I would expect to start seeing some super strength throughout 25. Whereas I think at the moment we just need to build up for that. Again, leaning into end of year weakness and end of year risk on asset rally. So that's the bigger picture in the short term, and why I'm leaning towards still having a sell-off based on chart and fundamentals. Obviously, if we start breaking out and going above 109 and higher, and if we go anywhere near the territory of the previous high from 2022, then we might have to seriously look at being in a serial breakout for the dollar in the very short term, and we're probably in super inflation problems by then if that's happening. So, but that is obviously potential, but I just think people haven't fully thought through the whole inflation implications of the Trump policies at the moment. It's very easy to say that they're super inflationary, but they're designed to not be. They're designed to attract capital into the US to make locally and not even have to implement the tariffs in the supply chain, really, is the win. The WIN. So again, look, we're very close. We've not traded into that resistance gap from back here in 23. And we've, again, so that could be the whole top of the AEB we talked about, because if that doesn't get taken out, we're pretty much guaranteed to be in that triangle, I think, if this holds permanently as we float around. But if it does end up being a 5-wave, finishing wave C to finish off the wave X, then I think be careful, because that will be a fairly swift breakout that then gives way. So net, it's very close to fading dollar time, I think. The EU, all I'm hearing is negative for the euro. The parity guaranteed, lots more downside. I do think it needs to go and test 104, but we'll see how it reacts there, because that could easily be the same setup as the dollar. And again, what have we looked to do? At the moment, could easily be just a continuing sideways flat until we make our mind up, but it could very easily have bottomed here and be putting in 1-2s, just like we had a rejection of further upside for the dollar. If that holds, it's highly likely that this low here is actually a base before we start moving up. GU, I don't know why, but I only ever seem to see Mrs. Mann making comments and getting airtime. She is a super hawk. The others should come out to bat a bit more. Now, data for the pound has been relatively soft through last week. To me, the most important bit is index of services. That has been high correlation with the rate cuts and with inflation falling over. Mrs. Mann quite rightly says there is some sticky pressure in the services components. So this week, we've got CPI and we've got retail sales. Remember, a lot of the shopping data was very mixed throughout October, with record volumes, but people actually trading down. Value traded down. Volume visits were up, but value was down, if you remember, on the Chamber of Commerce data. So we'll see how that feeds through to overall retail sales. And CPI, obviously, if index of services is low, that's suggesting there might just be a little bit of giveaway. If there's any kind of weakness in these reports this week, I think we'll get a December rate cut. But the fact that we're expecting potential bounces, to me, suggests there might just be enough for Mrs. Mann to make enough noise just for them to hold off a little bit. I don't care anymore now, because they've waited so long that I've had to do my remortgage. So it can do what it wants. All bias gone. UJ again, that potentially has topped, but I'd love to see a clean, obvious 5 waves for the wave 5 before we have the X of the WXY. Again, it doesn't sound the most logical, but I think that might end up being a little breakout and Mr. Intervention reappearing. Probably just chatter, but we kind of need it. And any kind of dollar weakness, obviously, will help. And if they do their usual pattern, if we start to see the dollar roll over, there probably will be some chatter about potential intervention anyway, just to give it a little bit of an extra kick. Oil, I spoke about. I think the primary idea is that this just keeps drifting down. We're already at a double test here, aren't we? This is Brent. And to get down here, 60 and below wouldn't take a great deal, particularly as this should be a wave 3 breakdown. Well, the OPEC weren't overly bullish last week, and neither were is it IEA or EIA? Both of them were saying something. I think it was actually the EIA report, because they suggested there'd be some near-term drawdown, and they got an inventory build. That was it. So despite API seeing the drawdown, it's very noisy at the moment, but there's no data evidence of any real breakout. China retail sales jumping up didn't make that much of a difference on Friday, and that soon rolled over. Geopolitics isn't really affecting oil at the moment, but I wouldn't rule out just having another little bounce. It could even be a double of that leg up and still be valid as a wave 2 before we move towards next year and no improvement really sees oil rattle off. But for the moment, I think it's so weak. The momentum is so much with the downside that, again, on Brent, put in a 73 stop loss if you play in the short, just because momentum-wise, it's going to struggle to break that unless something changes. And that could well be your next retest that then gives massive downside. Gold and silver. Gold, keep talking about it. I want to see this final low, really, confluence of channels, maybe even a test of the long-term tops of the next 2 lowest degree of wave 4. So they start at the top of wave 3s. So this little channel here, massive support zone, an overthrow of 2 of the actual confluences here for the up channels. Well, the up channel and the down channel still sitting here, equal legs of the whole WXY around 2,500. That would be an absolute classic gold playing to the Elliott wave to the T before it then bounces. Now, obviously, we've had to try to have a move up overnight. Was that on the North Korea thing? The dollar being slightly weaker? Who knows? But at the moment, I just feel like there's a good chance that this rolls over again. It might, again, do a double of this first move up that we saw from that overthrow. We talked about the overthrow at the end of last week. Expected a bounce. Would that hold? At the moment, we're putting in a kind of connector that needs to hold the middle of the connector here. Otherwise, it is a nesting to the downside to finish off this whole pattern. So I'd be amazed if it's exhausted itself just yet. I'd like to see a proper supersell, high volume, cathartic sell off into this area, just where, as everyone's saying, it's about to blow up completely, and then we'll get the reversal. Just a reminder of the long-term silver from the 70s. We're in that. This is a 3-month chart, so we're in consolidation from that breakout high. I think when gold does bottom and we move up, we start to get some serious moves on this cup and handle breakout in the next 6 to 12 months. I see Goldman's have come out with a 3,000 target on gold for next year already, talking about fundamentals bang in place, etc. So we're not far off. It's just a case of timing the bottom as such. Really, we should be playing into it in gentle tranches. And again, silver, look, if it is a second wave consolidation, it's already hit 61.8, tried to bounce. There's no reason why it can't go a bit deeper. Remember, it does underperform gold, so there's a good chance that we might get 78.60 fib. and then go. But I would expect a retest of 61.8 fib. So that really was the idea on the charts. Just want to go back to that dollar chart. I can find it. There you go. Right. All right, I'll have to present you that next time. For some reason, when I shut it down, I'd not saved everything, so I need to relabel what I've done this morning. That's annoying. Right, but in any case, just a quick look. We've got the ultimate high in the 80s. Which again, I can't get to, but basically 160s was the ultimate top after the DXY idea with other currencies was formed. We ended up with an ultimate low down here in the low 70s, which is all part of a sell-off. And at the moment, we're doing a consolidation pattern, which ultimately at grand super cycle level is an ABC before it resumes probably a test of downside, when ultimately in years to come, the dollar will probably go out of relevance given the advancement of crypto, etc., and all other issues with the de-dollarization and the fiat money, etc. But that's all for another day. But I was just going to show you where we sat in it and why the current structure is more akin to being a sideways move rather than being a long-term dollar bull. But I'll recreate that for Thursday or Friday this week. We'll go through that because I think it does help in your mind, give you a sense of where you are and where the fundamentals and the macro fits in within the chart patterns, and why it becomes very, very crucial when we're at positions like we are at the moment. So that was just a quick look through some charts. That was the pharmaceuticals last week. I absolutely drilled, didn't it? On the back of Kennedy Jr., etc. But what we need to be careful of is just reading, having a direct read through. If we go back to just the August low, all we're doing is challenging the bottom of the upward trading range. Really, it hasn't put in a lower low on that trend, neither absolutely or relatively. So a lot of puff taken out of the pharma index itself. We'll see how that develops. That is obviously, don't throw the baby out with the bathwater scenario. That may well be a short-term buy opportunity looming. Maybe get a little overthrow. Even if this is going lower, it's highly likely we get a decent retracement before it continues. And again, that might be part of the end of year rally back in terms of the equal weight index. Some of these heavier weights just having a bit of recovery before ultimately policy comes out in the new year, which resumes the downside. Nothing on that one. We talked about the VIX, etc. We were looking for this absolute implosion of the implied vol. We've had it, and we're now just getting a bounce up. It's how we react really in here. I think we've now resumed back into this longer term 16 to 20 kind of channel we've talked about, which is very much risk on. And if we stay anywhere below 1%, then we are 1% per day, which is 16 and below, then it is turbo time. And I don't necessarily, because of the machinations of how this has taken place, this hasn't been driven by risk on. This is into the eye of the storm that we've been having this collapse. So it's definitely an unwind of a structure rather than downside outright betting, which is why we said we should be ignoring it and the strength of it as a sell signal particularly. God, it's cold as rubbish. So, yeah, so the Dow, it's just meandering so far today, isn't it? We put in another low for the move. So we're into this zone. It's just literally seems to be searching for a bottom. If you think that it's all over already, then just keep using the latest actual range, just a little bit below for your retests and stop losses. So now, unless you've got any questions, which I'd love to hear. Yeah, we've had a bit of a meandering session, haven't we? Remember, there's very little data out this week, particularly US side. A lot of the talking heads, what they've been coming out with language, you can read it in the preview, but lots and lots of referencing to we're still restrictive. Goolsby's come back out to help clarify. Kashkari was, as a few people watching him last week have said, he was a bit all over the place. So we send out the strong batter. Collins has been quite supportive too. But Goolsby went through a lot and saying, look, we're still looking at the September, the SEP, as it is, the September Statement of Economic Projections. And that is what they'll be discussing in December. And they don't think net a lot has really changed within the parameters. And they've still got, as you said, underlying weakness on the employment side, despite the fact it looks like it's bobbing along. So there's every chance that they carry on normalizing. Remember, Powell has distinctly not said stopping, but talking about, just like Bailey, being gradual, having the opportunity to look and see. So they're not committed either way, but they're not committed to stopping either. So kind of read between those lines. I think it's almost a given that they want to cut in December. And if they're going to pause, it's going to be actually into the new Trump presidency rather than the second guessing ahead of it. That's just my interpretation of how they'll be looking. So then, if nothing else, it can all get blamed on the Biden administration. The DAX 40. That looks like there's every opportunity for it to rally from here. That is a kind of double extension. It's how, as I put, the first test is what happens when we retest this actual level. If we break through, is it all part of this move up, a 3-wave move, 3-wave down, and then if we've got one more set of small degree 5 waves to put in an overall 3-wave, what looks like a rally, but is actually just a consolidation before Trump policy weakness comes back and just holds back the DAX from having its breakout yet. So it's all a bit confusing. I still lean to a lot of these things just having one more little test, but we've got NVIDIA this week. That could change a lot of things to the upside. Yep. Nikkei 225, again, still muddling, still searching for an ultimate low. That little wick made everything a little bit confusing for it. So for it to be a complete flat, we probably have to just test that, if not go below it. I feel like we are set up a little bit like that, meandering into it before we break again. Doesn't seem a clear finishing pattern just yet. Almost demands a 5th wave from there. If you look at it, 3 down, quick 3 up, and then 5 down. We're a bit quiet on UJ at the moment. News flow wise for the dollar, again, outside some kind of safe haven flow, or be interesting to see what happens with the dollar if NVIDIA does happen to create some kind of selling pressure. Is that risk off, dive into the dollar, or is it risk off outflows because everyone's selling US equities? It's a toughie. I think we just have to be a little bit reactive this week because we are on what we describe as kind of binomial outcomes. I'm leaning myself to the seasonal breakouts. I'm sticking with the seasonals for the moment, but that's all they are, seasonals. They're not guarantees. So we have to be ready to change our mind, etc., etc. So unless anyone's got any questions, there's no real changes to much there. I'll just quickly look at the dollar because that, not dollar, the gold. That's right, because I did that chart in the pack on Saturday. So, yeah, we opened up with some strength, didn't we, today? There it is. So that very much is looking like the double extension. We're into the other side of the channel. Now, what does that suggest? That could even mean that the A and the overthrow could move down there and that the B comes across here. I mean, we did say last week that looked more like a significant low and had a significant low on the MACD as well, didn't it? So I think that's more likely. What that does is open up slightly different setup for the pattern, because if that is the A wave, and let's just say this channel is still valid, then that brings equal legs down here into 24.35. But again, remember, and a lot of the time when these things go into pivot mode, 61.8 for the C leg, as long as it's a new lower low, starts to come in. And again, that sort of sits with just holding on to that previous support zone of the wave 3-4. So I don't rule out a and it still remains, that is a cathartic sell-off potential still, and it still sits with the existing channel and having that as a cathartic first leg down of the ABC. So that potentially is another way of looking at that. And yeah, the reason for that is if we had that as an A there before, and we've got this extra connection, second low, look, we've got divergence, we've got a higher weak momentum into a lower low. So that is giving you a suggestion that that is a proper turning point. So we're scrambling to try and find where that turning point would be. So at the moment, there's no real divergence yet for this connector, but that really means it is a connector. Connectors often tend to just have the classic peak and higher peak, and it's the turning point that we're looking for down here for the divergence, for the end of the move overall. So lots still open there, quite a valid move, but I'm expecting that to roll over for one final time still. I don't think this is the end point in the 25.32 tick. So keep an eye on that. Don't get too carried away with the breakout just yet, because this still sits in the same ballpark that we've been looking for. Anyway, good luck with your trading this week. I'll be around on chat for any updates. I'll try and do some more filming at the end of the week if my personal life allows that. But yeah, good luck out there. Be careful and concentrate. There's lots of distractions out there for us, and don't get too carried away with it all being about NVIDIA. NVIDIA obviously has got lots of issues going on. Don't necessarily trust the first call down, because that happens generally, whatever. Some people just like to literally try and kick off the stops, etc. Let's have a proper review and see what the outlook really does look like, and trends, and see what they've got to say on SMCI, and see what they've got to say about tariffs and China, etc. So good luck. Hopefully it's not too boring into Wednesday, but be careful out there.